Okay, it's 7 p.m. Time to kick off today's very interesting discussion that we're really going to have. And on a day when markets have been down 2 days ahead of the budget, that should be really a good point to really be discussing what is going on, how to look forward to it, not just in the short term, but also very, very long term, for which I have very, very interesting guest with me, Ritesh Jain. For those who are familiar or not familiar with him, he's been the former CIO at BNP Paribas Tata Mutual Fund, managing billions of dollars, and then moved on to Canada, where he manages Pine Tree Macro, global asset allocation theme investing fund, advisors Eastern Financials in wealth management in India, and recently launched NRI's Then, a platform for NRIs to participate in India's growth story. Uh, lot of lot of insights that I get from him on macro. In fact, what I know is because he invests in various markets and looks at different asset classes, the right person to really look at which countries, which sectors, which asset classes, where to go, and understand the overall developments that are happening from various angles. There's so much in geopolitics that really needs to be understood. Now, where we are in the markets, people get worried moment you get a day like today, you get a small blip, then the talk of bubble comes back, right? Everything is overvalued. We are in a bubble. We're going to crash. This is it. Budget is a no-brainer, and these interim budgets do have a history that they actually, and especially the post-election budgets, I think the only one I remember which was path-breaking was 1991. I'm not sure if there were any others that were as path-breaking. They are always been continuity. Though I would expect, as expectations are actually not that high right now, if I'm not wrong, but I would expect something in terms of setting the direction and course right for where we need to go from here, and that should set the stage for how markets behave over the next year or two. I don't expect anything negative. My personal hope is to get the peak tax rate down, something they've done once before and possibly need to do further on, apart from setting the direction in which sectors and get credit moving. So those are my things. For credit to move, they can be very, very different angles that they can take, apart from trying to bring down the fiscal deficit. So that is as far as the budget is concerned. And I've also written the long short report recently. I have the strike handle on this spaces as well. Strike, for those who have not yet used it, just a quick take, go to web.strike.money, click on all the menus on the left, and that would sort of set you off. It will ask you to sign up for the 7-day trial, but that will set you up to see all the kind of interesting varied features that we have created. I don't want to list them all out here, except for maybe RRG, which is relative rotation graphs that are extremely useful for sector analysis, and even stock analysis, the kind of rotation you get on momentum and relative strength. So many interesting features. Go try that out. Now, where we are in the markets, more than a month back, I wrote a long short report, and I've written one a few days ago. Move away from earlier risks. So I think post 2020, what I've been anticipating is something I initially called the reflation trade, and I think we are setting up for 2.0. The only risk in between and the only thing that hampered it a bit in 2020 was I thought that the dollar had peaked in 2017. I think it has definitely now. Hopefully, I'm right. And if so, then the real long trade, 6-7 year period of dollar weakness, lower yields is sort of what kicks off these cycles. We've seen one cycle in the commodities rally during 2020-21. I think we are set up for more to come. And that is where macro becomes really interesting, right? It's something that can keep you on the right side for many, many years. It's more long-term oriented. When we actually think, other factors, they can sometimes be short-term. Everybody wants to know, okay, what tomorrow, what next month. But sometimes you need to have the big perspective in mind. And that really keeps you, fairly, you can say it can bias you, but at the same time, it can keep you on the right side and allow you to sleep well and stay invested through all the ups and downs of the market. And I think that is the interesting part we are in right now, that we've gotten past all the volatility that we had in the macro space and sort of entering a very, very stable period. So the moot question, therefore, that I get now, and that is what I'll kick off with asking Ritesh here. The moot question that I get now is, okay, fine, if you think the markets are going to rise, but what about now? Are we going to get a near-term correction? Can I buy 1,000 points lower? Isn't this all overdone? One-way run in certain sectors. Shouldn't we get a correction first and then only invest, not really enter the markets now? This is the, or should I buy now then? Does it really matter? What should be the approach? That is the question with which I will push this towards Ritesh, and also mention that the title here, The Making of a Bubble, essentially comes from his recent presentations that he's been making. You can find the 2 series YouTube presentation as well on Ritesh Jain's YouTube channel, which is, lot of data points, lot of interesting charts. Hopefully, he'll throw a lot of light on them. And with that, welcome Ritesh, and you can, take the mic.
Thanks, Rohit. So I'm clearly so there are two views over here. Uh, when we take a talk about making of a bubble which is not supported by fundamentals burst very fast. A bubble which is supported by fundamentals have a little bit longer runway. I believe, and there I have a little bit difference of opinion with you on the budget side. I believe governments and regulators have become very powerful post COVID, and it is not only in India. We should not be looking at how Indian government is behaving. It is happening across the world. Government is now 35 to 40% of GDP creation. You might be surprised to know that in France, 45% of the GDP comes from government expenditure. In India also it is closer to 25 to 30%. In US, 35 to 40%. So essentially, one third of the GDP in the Western world actually is attributable to government whims and fancies. Government's expenditure in a particular sector. Government can actually decide to take money from one part of the economy and give it to some other part of the economy. Having set the table over here, I have been for the last 4 years following this approach, and I will continue to follow this approach till the time the government expenditure as a percentage of GDP goes down. Unfortunately, that might or might not happen for the simple reason everybody loves power, and government loves power more than anybody else. And once you have given them the power, which you gave them a very clear power after COVID, they have not given back this power. They are using that power to actually decide the winners and losers in the economy. So, with that being said, I believe that India is going to embark on a kind of a bubble where there are two outcomes remaining over here. Either the government does not do anything now, and we continue to pile on this particular bubble, what we are talking about the markets, which I think you also wrote day before yesterday, and completely agree with you, except for the timeline part, that everybody continues to pile on this bubble. The fundamentals do not catch up. And at some point of time, ev- the, the higher the bubble goes, the more liquidity that bubble requires for sustaining the bubble. Forget the prices going up. If you have to maintain the higher prices, you need more and more money just to sustain those prices. So if you do not have the fundamentals catching up, then at some point of time, this bubble will burst. It is possible that this bubble burst over the next 3, 6 months. It is possible. I am going into the other direction. I believe that this bubble has a longer runway in front of us. And that is where my recommendations are coming to anybody who's coming on NRI's platform. Do not invest lump sum in market now. I believe that we are going to go for 12 to 18 months, or it could be 18 to 24 4 months of slumber. Government is going to prioritize production over consumption. Government is going to prioritize production over speculation. And I am basing my view on what I've been seeing Indian government is embarking upon. India is actually now following the South Korean models of chai balls. And which is obviously, you know, that after a North South Korea war, North Korea is still there, but South Korea has become a global powerhouse. I believe India is also exactly going the same way. And if I were to study the history of South Korea, then they actually curtailed the consumption, speculation, they actually incentivized production over consumption. So this budget becomes a very important thing for me, and that is possibly the reason that you have started to see nervousness in the market. In this budget,
So which year for this, Ritesh, which you're referring to for the
so
chaebols?
between 1960s to 1990s, there still continues to be only seven chai balls, actually.
Okay.
Okay, when we talk about Daewoo, Hyundai's, uh, there are what, four, five of them more, LG. In Japan, they are known as Kiritsu, but which is a very small part of the economy. In South Korea was actually, and Mr. Swaminathan Ankulish earlier has just written an article on the same subject just a month back. I think you should read that article. So you are going to give the power to
Yep.
six, seven, eight people, six, seven, eight, your champions, to take the country forward, in such a way that you help them in every particular way and tell them, go ahead, rule the world. Okay, we will help you with everything. So that is what exactly I think the Indian government is trying to do. But if I were to go by the South Korean models, they actually curtailed consumption. They curtailed speculation. They actually massively incentivized production. Now, again, I'm going to one more number which I have been working on. India is seeing a jobless recovery. India is seeing rich people or people who are wealthy staying in metros, and there has been no wealth outside the metros for the simple reason we went through for a different model, which was the service sector. Okay. We did not go through the manufacturing route. Every poor economy, before becoming rich, first goes for manufacturing because manufacturing creates five times the more jobs than services. But since India was not having physical infrastructure, it was having digital infrastructure. We went through services route. And now you are finding services as a major part of your benchmarks, major part of your economy, manufacturing only 15% of your economy. That has led to, jobless recovery. But I believe we are going the other way around. Now, whatever we missed over the last 10, 15 years was the manufacturing part, is what we are going to get into. Now, manufacturing is very wide. We cannot get everything, we cannot compete with China. Uh, I- that is for sure. We cannot compete with the China at all. But we can, they are at $10,000 per capita GDP. They are leaving some things for us. When they were $3,000 per capita GDP, what they were producing, we will be producing that, but that will lead to more. Uh, Let me put it this way: you don't manufacture Apple phones in India. You assemble iPhones in India, or you assemble iPhones in China, or even toys. So all those things will start happening. That's why, coming back to your bubble part, over next to 12 months, I believe policies will be made in such a way that market goes into a slumber, that you have the fundamentals catching up to the prices for this bubble to have a very longer runway. So there are only two parts. I think, Rohit, in your latest long shot, I actually agreed with that thing where you said that over the next 3, 6 months, either you can have this thing or you can have a longer time horizon over there. I do not have any price in mind because that is not my domain. My view is that, am I looking at a market which is going into time or price correction over the next 12 to 18 months, where we will forget about, in the next 6 months, you will have half of the listeners on Indiacharts, this Twitter spaces, or one third, because the market has completely flattened out, nothing happening, speculation is out of the market, more money is leaving the market and going into the real economy, because money can either go to equity markets or money can go to real economy, create jobs. So policies are made in such a way that more and more money is shifting to real economy, creating jobs, sucking away the money from the markets. So this is my preferred scenario, which will happen to 12 to 18 months, which will reset the timelines, which will reset this bubble, which will have it a longer runway. If I'm wrong, then possibly in the next 2, 3, 6 months, this bubble will go parabolic at some point of time and will burst itself. All bubbles burst. There is absolutely no doubt. Either you can have a very violent bursting of the bubble or you can have deflation of the bubble. I believe that we are headed for the second time, but first, we will get some support from the fundamentals for this fundamentals to catch up to this bubble.
So you don't think that what we saw in 2021, 2022 was that kind of a pause that we saw in the overall trajectory? Because in that time period, even as earnings continued to grow, index level valuations have not expanded. Surely we've seen it in certain sectors, whether it's defense, whether it's railways, or where people are generally concerned. maybe some of the mid caps, but it was not across the board. So therefore, you had sectors like autos, pharma, FMCG, which actually consolidated between 22, 21, and we didn't see a valuation expansion overall at an index level or a market level. Is that correct?
So I am not even considering that into account. For the simple reason, 2021 to 2022, I do not believe that that was the period where we could say that fundamentals were catching up to the bubble. Actually, fundamentals are not even catching up to the bubble now. So you are actually expanding the P multiples, and that is what normally should happen in a sector where you see earnings coming in the next 5 years, but you do not wait for 5 years. You actually make it, you actually have to price it today rather than, wait out for 5 years for those earnings to come in. And secondly, a smaller problem is coming in India, where our benchmarks are 55% made up of services. Okay. But the government is saying if my GDP grows by X, I want my manufacturing sector to grow by 2X. Now that manufacturing sector is only 15% of the portfolio. So I believe only in manufacturing part of the market is where where the expansion has happened ahead of fundamentals catching up. Every other part of the market, I think, is perfectly valued at this point of time.
So manufacturing would be a very, very wide basket, right? Because mostly people only think of the make in India, electronics and so on. There must be many other sub-segments of manufacturing, which is what you're referring to, that are not yet recognized in terms of size by the market cap or in the indices and so on.
I'll give you a small example. And all of this started, my view started becoming a little bit more broad when Russia-Ukraine war happened and Russia's foreign exchange reserves were confiscated. I've talked about this many times. Now, I will not go into that gold part at all. That's a separate thing altogether. At that point of time, every country started thinking about how can we bypass dollar. No, I'm not talking about de-dollarization also. So here is where, 2 years back, we started taking oil from Russia, and whatever oil you took, you give them INR because you cannot give them the payment through SWIFT. Now, there was Sergey Lavrov. Why I'm giving you this example? Because this example will happen across a lot of different countries, and it will tell you about what new sectors are coming, where which are not even which we are not even thinking about today. So what happened is that since we don't have much to export to Russia, we cannot compete with China on manufacturing a lot of things. So what we did was we gave INR to Sergey Lavrov, sorry, Russia. Okay, here is your $40 billion equivalent to INR lying with a bank in India. We will not allow you to buy Indian assets simply because you are sanctioned, but you can buy goods and services from India. Over the last 1 year, now it's a very small part. Now just look at the base. Over the last 1 year, engineering exports to Russia are up 130%. 130%. From nowhere, a particular sector came into the market, a particular sector, all because there were two countries which had to trade among themselves. Okay. And they did not have a choice. So even a sector which was not a global level competitive sector, okay, global level competitive sector, still, just because Russia had to use that INR to buy Indian assets, okay, sorry, Indian goods and services, actually gave a lot of orders to this particular sectors, and you are having engineering exports going up 130%. Secondly, now, just recently, I do not know why people are not taking it seriously. We've just given a 25,000 crore line of credit to SAARC countries. This is INR, this is not dollar, this is INR. So we are just saying to them, okay, this is 25,000 crore line of credit. Line of credit means you still have to pay back money in 15, 20 years. But Bangladesh, Sri Lanka, you can actually buy goods and services worth 25,000 crores from India. When was this kind of, or let's say Africa, we are going to Africa and we are having a swap, we are giving INR lines to a lot of African countries to buy goods from India. So we are internationalizing INR. We are internationalizing so many new sectors which were never there because we know the demand of Indians. We do not know what all these countries are looking to buy from India. Whatever they are looking to buy from India are the new sectoral winners. You're sending Pinaka missiles to Armenia. Now, Pinaka missiles is becoming a very, it's now being accepted across the world, at least not in the tier one countries, tier two, tier three countries, which do not want to get into the fight between US and China. And they are finding India as an acceptable face simply because India does not threaten anybody. And you are having orders being put for those missiles to India. Now, Germany, it is actually an irony. Germany is actually buying bullets from India to send it to Ukraine. So you have massive order has come for making bullets in India. So we are supplying to Ukraine, and you are even supplying to Russia. So can you see that we are talking about completely new sectors out of nowhere, suddenly coming into the war? And these are the sectors which are actually going to be massive new winners in the coming years, irrespective of your benchmarks.
And they are in the listed space.
So a lot of them are in listed space, obviously, and you can see the when you see the unless you go down, first look at macro, then go down to the micro level, you will not be able to understand. And people keep on telling me for the last 7 months, QIPs are happening, QIPs are happening. Okay, don't invest in those companies. But there are a very large universe which doesn't want to dilute, which actually doesn't want to dilute, which is very happy holding a 70-75% promoter stake over there, and they're very confident about it. I have it across 4 or 5 sectors, is where my bandwidth is limited, Rohit, first of all. So on my limited bandwidth and my macro understanding, I can go only to a very small part of the market which where I've built up
Yeah.
capabilities, where I've built up knowledge, and this is very happy I'm willing to keep it with that because I know it's a decadal theme. So if it corrects by 10, 15, 20, 30%, how does it matter to me till the time my view changes?
So can we actually get into, okay, before I ask you what sectors there, just one more macro point. So in the beginning you mentioned about government involvement in the markets, and that sort of reminds me of what happened in the US, say in the 40s to 60s, when government involvement increased. They were spending a lot more. You had multiple inflationary cycles. So that is something I tried to discuss a lot in the long short report as well, that that back and forth keeps happening. The only thing in the case of India, because I was wondering whether we are around 5-10 years behind the US in the cycle. Did we really go through what they went through in the 2010s? And if we really need private sector capex and credit to pick up, do we really need lower interest rates? So that is where my thought of government slowing down, at least in India, cutting back on expenditure, because our government debt to GDP post COVID shot up to 90%. Now it's back to 80 something. They may want to bring it back to a 70 something before they spend more. So they really want to incentivize uh, private sector investment, and that crowding out, if it goes away, would actually bring down interest rates. So that is sort of what I was trying to think. I don't know whether it fits in your model, how you're thinking about government spending and the rate environment in India.
Actually, government of India is not even, it is not even leading to contraction of private sector borrowing at this point of time. But let me tell you a new thing which is happening globally. Globally, the risk is shifting from the banking sector because banks have become too big to fail, and it is happening in US, it is happening in Europe. All this money for big private capex is actually coming from private credit market. Private credit market has actually grown up by leaps and bounds. I'm not having number. If I knew we were discussing this thing, I would be having some number. I have a couple of friends working for global pension funds. They have carved out completely different units for global private credit. So all because banks are asking 10, 15, 20 different questions because now they are ring fenced by the central banker. Central bankers think that they should not be taking excess credit. So why are we worried about bank credit? That banks will be crowded out by the government spending. The new money which I'm talking about, whether it is in US or whether it is in Europe, it is all coming from private credit, and all this private credit is funded by global sovereign fund, global pension funds, and there is massive amount of dry powder lying around over there. That will happen in
So
India
is there a
also.
case?
That will happen in India
Mhm.
also. We will get global private credit will be funding India's capex story. It will not be the banks. Banks don't have that kind of money.
So then what we are looking at basically is a lot of foreign debt participation in the Indian market, sort of pushing the yield curve over here. Is that what we should be thinking?
Or that INR becomes a kind of, our macros. You just talked about macros. In 2004 to 9 also, until 2019, our macros were very volatile. You
Yeah.
couldn't take a call whether on inflation or whether GDP growth rate. Now you are seeing that across BRICS countries, currencies are becoming much, much more stable. You know? You can look at INR. I know there is a heavy hand of RBI over here, but honestly, no central banker is now worried about getting into the list of US, which comes out with currency manipulator every year. Slowly, we are not even thinking about what other things about us, or whether WTO thinks about us and putting trade and tariff barrier is wrong. We don't care about that thing, and that is how the global order is unwinding. In that kind of environment, if I have a stability on global macros, I'm growing at 12-13% nominal GDP. I'm having 4-5% of inflation. Yes, massive amount of global credit will come to India. They will not be worried about currency depreciation. Actually, over the last 6-7 years, whereas Indian currency depreciated against Canadian dollar, British pound, euro, JPY. Only USD is the only last man standing. Which, if President Trump comes, he's already told you what he wants to do. And again, I'm
Yeah, that
going
is
back. Rohit, again, I'm going back to, in a democracy, you should not be looking about what a single person is saying, but that single person
Hmm.
is going to decide the fate of a lot of industries in US.
So this raises that big. So when people talk of the dollar and de-dollarization, or they talk about the dollar standard moving, one thing is of course that US needs. So this takes me to the question and the big debate. You've probably also mentioned Luke Gromen so many times. We discussed Brent Johnson many years ago when I was at Sher Khan, and whether that debate is really settled, because they're essentially saying the same thing in the end, but it was all about whether the dollar goes up first and then comes down. Brent still sticks to his view that the dollar has to go up, though we got the spike in 2022. So my question is, are we done there, first of all? And second, if we are done there because the US has to finance its credit and keep expanding liquidity, and we have a weak dollar environment, and we already seeing that liquidity comes to India and that credit comes here. And the second thing, which with Trump, and probably which is already in motion, and I don't know to what extent, since you're situated in that part of the world, you would know to what extent is this idea of US taking back production or manufacturing to itself really happening, and that would be the other big trigger on the dollar, right? So what Trump is talking about, to what extent is that already happening? Is it that simple? Is it like you can just flip a switch?
Uh, I would have answered that question in a negative way before COVID. But again, I will go back to the same my argument. Government is deciding winners and losers. Finally, that might or might not happen is a separate thing altogether. Like 5 years down the line, this industrialization, if US starts, it might or might not fructify for a different reason. But you will not wait for 5 years to invest, right? Markets are a discounting
Yeah.
mechanism, and in a time of social media, due to democratization of information, where you, me, and everybody listening on this call have the same information at the same point of time, will not wait for 5 years, right? Now you should listen to it's today when you listen to President Trump. I had actually written about because I've read his. Ultimately, for me, investing is all about people these days. What is this person thinking? And he's not a dictator. He's a leader of a democratic government. And I would say the same thing about some other countries also. He's very clear about what he wants. He's saying dollar should not be, dollar should not be constraining us from bringing back our industry. In 2001, 2002, you allowed China to become a part of WTO. I have to go to this history lesson to explain you the future. Sorry, Rohit. It will take 2-3 minutes.
Yeah, no, definitely. That's, I think, very, very enlightening.
We should not have allowed WTO China was not ready for WTO because it was not market economy, but due to pressure of US corporates who wanted increase in profitability, Bill Clinton actually bent backwards. And there is a beautiful video on that particular thing. You can listen to it separately. He bent backwards, and those jobs were shifted to China, and that led to rust belt. That led to massive amount of job losses, blue collar workers in US, and everything went to China in spite of not being a market economy. They kept their currency lower. They flooded US and rest of the world with goods and services. When President Trump came for the first time, he still listened to bureaucrats, but he was very clear that he has come because of the votes of those people who say enough is enough, we want our jobs back. His second term is when, in the first term, including Mr. Modi also did the same thing. He listened to the bureaucrats. President Trump also listened to the bureaucrats in the first time, but he learned from that thing. Unfortunately, President Trump did not get the second term, and it was Mr. Biden. And now he's getting his second term, and he's learning from that that you should not listen to bureaucrats. You should go ahead and do what you think is right. So he is going to go ahead and do what is right, which you can have a very good understanding when you listen to Senator J.D. Vance. President Trump has got in himself as a vice president somebody who's a mini Trump. So there is no checks and balances over here. There is nobody for a counter opinion who will give it to Mr. Trump, because Trump and JD Vance think exactly same thing. And tomorrow, if Mr. Trump is not there, JD Vance will do have exactly the same policies which President Trump is there, which is industrialization, getting our jobs back, creating a trade and tariff barriers, and that is very and dollar. We should not be exporting dollar. We should be exporting goods. We should not be doing dollar. And that means lower interest rates, lower dollar. If that means we have to do a yield curve control, go ahead and do the yield curve control. We have to make sure that Japan appreciates its currency, China appreciates its currency, Mexico, which has got some corporates which are investing in Mexico to take advantage of NAFTA. They should not be in Mexico. They should be coming to US, not in Mexico. And he will create enabling conditions, which is already happening in clean and green energy sector. You can already see the numbers over there, but it will happen in broader part of the market, which he believes, okay, is the one which should be getting that kind of investments. And for that, if you need investment in your country, you need lower currency, because let's say your currency appreciates by 20% against Taiwanese dollar. Taiwanese will find it extremely difficult to invest in US. TSMC will say, how can I invest in US? Your currency is already, so costly against my currency. South Koreans will say exactly the same thing. Okay, so you need a lower currency for those people to have more bang for the buck. And that means you will want those people to invest in your country. So in that kind of environment where the reserve currency of the world says, you know, it was good till the time it lasted. I do not want to be the bully in the world. I do not want my 7, 8 aircraft carriers roaming around the world, keeping the shipping lines safe. I want my jobs back. And for that means if I have to sacrifice the dollar, I will go ahead and sacrifice the dollar.
So I guess that's a very, very big macro change really coming our way. And when these structural things happen, they're usually multi-year in focus. And when I think of a weak dollar and lower interest rates, it simply signals in my head that this triggers a huge liquidity flow, and which is why I had to keep both scenarios in mind. That can we really get a correction which is more stock and sector specific, while money will continue to flow into other areas. But surely, if we get a 12 to 18 month consolidation, it gives better opportunities, not just in some but across the board. But can money really keep rotating, because there is a lot of flow, not just domestic, but now with the weak dollar, if it ends up being global, then getting that kind of a pullback is become harder to call. But yeah, I was recently with some heads of research who were raising the same concerns, like, that you need one knockoff either in the mid caps, small caps, and some of these sectors that have had a one-way run pricing in multi-year earnings growth that doesn't make sense anymore. So there is a particular bubble in clearly in certain segments of the market. But when I go back, and so when we actually read this again back to the headline which says making of a bubble, which is that we are actually setting ourselves up, and as you said, the second case, which is the better one, that we move slowly into this, and position ourselves right so that we can actually continue to grow for years, which is what I think in some way or the other would eventually happen, which then translates into stay invested, just pick the right themes and have some capital for that, for those opportunities that may show up in between. Now, going back to these segments, as you were mentioning, what are the sectors that could be specific? I also saw a couple of data points, in your presentation about how the manufacturing thing would really unfold. So, what are you really thinking in terms of what segments or what sectors really play here as we shift from away from services, and then services, but services doesn't go away. It's just that we need to increase the manufacturing pie, right? That is what we are really saying here.
So services will not go away, Rohit. That is absolutely
Yeah.
right. Now, before that, I will come to the flows part because that is very important. We have not even started seeing NRI flows into India. And that is exactly the reason I started a year back, I started NRIs in. Unless you come to Western world now, if you come to Western world 7, 8 years back before COVID, and if you come to Western world now, you will find a very stark difference now. Okay. These are the economies which were vibrant economies. Yes, they were growing at 2, 3%. They were vibrant economies where you could be confident about your future in these Western world countries, including US, Canada, UK, Australia, and Europe. Now we are even worried about whether our government will be able to pay pensions also or not. Because that is what you were supposed to get once you become old. A state is supposed to take care of you, whether it is medically till you go into your older years, or once you start retiring, that the government will be able to pay. But most of these places, you are finding that you know um, governments are actually going towards becoming bankrupt, or the value of money is devaluing very very fast, which is leading to more and more NRIs, because NRIs, whether we like it or not, have the highest per capita GDP in US. Okay, on a demographics basis. Okay, they are the ones who've already started thinking about of having a nest egg outside of what they are already having it in a places like US and Canada. Earlier, they used to invest in Indian real estate, but now, because of the policies which government is having, money is moving from real estate to financial markets. So I believe a lot of NRI monies over the next couple of years, 2, 3, 4 years, will start moving from Western world assets to Indian assets. So this is not even started. This is not, people are talking about it, but people are having inertia, complacency as of now. But it is almost on the verge of breaking, where you say, no, I can see what you're talking about. So I want to think in that particular, can we have an SIPs in the name of our kids, in India? I'm having those kind of conversations already now. Okay. So this was the first part. Sorry. Second part, you talked about the services part. Now I wrote about the services. Services will not go away. And actually, I missed one part of services, which I should have actually mentioned, but I later on mentioned in one of my tweets, is global capacity centers. Global capacity, so software is where you will find certainly that employment will generation will not happen because of the new technologies which are coming. But global capacity center is going to become a massive theme in coming years. You will find a lot of even companies across sectors which are setting up global capacity centers. So they are taking away the jobs from the one offshoring job they had given to the software companies, and they are bringing the job back, the same job back to their own global capacity centers where they keep all the data within their own company. I know of the big fives which are having some jobs in Canada and US. Okay, they are thinking of putting up their own capacity centers in India, which a lot of companies are already doing it. So you will find that GCC will continue to do well. In manufacturing, the most important thing in manufacturing is I do not play, or I do not get into the theme which everybody can look at it. For manufacturing, you require electricity. Any country which wants to manufacture needs electricity. Now we are having two more headwinds for, and there is no energy poor rich country in the world. There are only energy rich countries in the world. So you need to be energy rich to become a rich country in the world. Otherwise, whatever we are talking today will not fructify into what we are, rising per capita GDP or other things. So for me, the easiest thing to play for this manufacturing is actually electrification. And now I'm having two more things in this thing. Not only that we require more electricity for manufacturing, a little bit climate change is happening. Second, AI related demand for electricity is going up. And there is third more things which is going to be massive in India. I do not know whether we can capture that market or not. That is data centers. 25% of all the global data is generated in India. Why do we have less than 2% of data centers in India? Isn't it our data? Why should our data be in the servers in United States or in other part of the world? So the policies are being made in such a way that those data has to be kept in India, and that means more demand for electricity from data centers. So it is what you see in front of you is what everybody sees. But I believe money is not made, big money is not made in the first derivative. You have to look at around that, what is the best way of doing that thing. So you can say there are hundreds of themes in manufacturing. But whether any part in manufacturing, any part of you becoming rich and having more AC at home, or using your electric vehicle at night, which is not supposed to be good for transformers, or you need more AI related electricity demand or data centers related electricity demand, the entire electrification ecosystem I'm writing for the last 2 years, and it continues to do well. So this is one part which I'm very, very bullish. The second part is defense tech. All these tech related work actually is not going to be in US. It is actually being transferred to India. So that is why I believe that defense tech, whatever you are finding in defense, I'm not talking about defense manufacturing. I'm talking about the tech part. So the tech part of defense, where you have massive amount of large number of engineers working on the defense technologies, a lot of small things, those parts will do well. The third part is where I believe Indian government will have massive impetus in coming years, which will be in tourism. Why? Because I looked across the sectors. There is only one sector which can employ large number of people in India, and that is tourism sector. And now you have created basic infrastructure for your tourism sector to do well, whether it is leisure tourism, whether it is medical tourism, or whether it is religious tourism. So I believe these three sectors have stayed for the last 2 years. I'm not able to expand to, although I wrote about pharma in the morning today, I'm not able to expand to that because my understanding is very, very limited over there. And in having a limited bandwidth, this is what I'm able to see. I'm invested and I'm very happy with whatever investments I'm having.
So data centers is actually interesting. Given I think we've heard a couple of things from the government in terms of moving, Indian related data back to the domestic markets. I don't know if so. What you're saying is there would probably be more regulatory announcements on that front, and that really blows up the market, right? That could be the way that actually unfolds. And the other one which you're talking of is power, which is electricity. And we've gone through this entire thematic around electric vehicles. There is some talk of a slowdown in the EV market and, sort of loss of interest. And the thought that, well, uh, we may have to eventually move towards nuclear energy.
Yep.
And is that the way forward? And is then everyone going to slowly move away from this whole idea that, we need to move from fossil fuels to some other format, and now it's going to be only nuclear that everybody's going to explore because that's the only scalable uh, uh, source which will not damage the uh, world as such.
So what I think has no meaning, Rohit. What my government thinks where I
Yeah.
invest is what matters to me. Because if I cannot go into the justification of what being right or wrong, I have no view on that thing. So like Mr. Biden wants clean and green energy, and Mr. Trump says bullshit. Let's go back to the fossil fuels, right? Indian government is
Yeah.
very, very clear about clean and green energy transition. every time you listen to Mr. Nitin Gadkari, you get a very clear idea of the government thinking. Again, I'm saying I'm not going to do the rights and wrongs. I have no views over there. We will continue our transition or make policies in such a way that EV continues to become a big part of the market. Although whether it works or not, we will come to know with the time whether the adoption is higher or not. But EVs have to be plugged in at night. So you might be interested to know that those transformers which work for the full day are supposed to cool down at night. Every transformer has a 25 to 30 years life. But when you start, plugging your EVs at night, the same transformer has a 3-year life left because you're not allowing it to cool off. So I'm just giving you a small example of if you want more EV, then please be ready for more transformers. It's a very simple thing. Second thing about nuclear energy. Per gigawatt energy created out of nuclear is one of the lowest cost in India. And in US, it is 4 times that of India. The largest number of nuclear energy engineers in the world are actually in India, as per Louis Gave of GaveCar. Till 5 years back, lot of global interest in the form of NGOs and global organizations did not want India to be energy independent. And that is what I will do if I'm a global hegemon. I will want India to be dependent upon me. And I will make conditions in such a way that India does not go the nuclear way. But over the last 4 or 5 years, what we've done is we've slowly got away with those NGOs which did not allow us to become energy independent. And if anybody wants to know what India has gone through, then you should read Confessions of an Economic Hitman. What these multilateral agencies have did to various part of world, and you will be able to visualize what they did to India over the last few years. Now those NGOs don't exist. There are 52 nuclear power plant in construction in the world as of now. 26 of them are in in China, 15 of them now in India, and actually zero in US. But the best clean and green energy in the world is nuclear energy. Everybody has understood that thing. Fukushima is behind us. Technology has become much, much more robust. So I believe nuclear is the lowest hanging fruit, and India is already having those 15, 16 under construction. So again, I would say over here, you are absolutely right that we should be focusing only on nuclear energy, or let me put it there, focusing major part of energy on nuclear energy for the energy sustainability. If we do not have cheap and reliable energy, you will not become a manufacturing. You will not your manufacturing GDP as a percentage of GDP will not go up at all. Today you might not
Yeah,
be
so
revenue.
therefore
Just
it's a necessary.
it's
Then it's
necessary.
a necessary
5% of
requirement.
all the Maharashtra's electricity is consumed by data centers already.
Hmm.
Where is the energy?
So that means that that's one sector that will continue to remain on the run, as everyone will have to really expand capacity in the energy zone. But how much time would all of this take? So it definitely takes time if you have to invest in new capacities. Setting up a nuclear plant has its own timeline. I'm not sure to what extent a lot of that work has already happened in India.
So, Rohit, under construction, I do not know at what stages it is there. Okay. But I'll tell you, I derive my view of India by listening to what is happening globally. Okay. Even the electrification theme came from what is happening in US. In India also, we pick up almost the same policies. What are you finding in the electrification theme? What India is struggling with because India wants to become a manufacturing powerhouse. US exactly is doing becoming its own way and it wants to become a manufacturing powerhouse exactly at the same point of time which India wants to. What US is struggling on the electrification side and what are the timelines over there from transformers to cables and all those things, the same thing is applicable to India. Only India has gone completely the nuclear way in addition to the other parts of electrification. US is still thinking about whether to go ahead with that or not, although they've recently passed a regulation. Now it takes almost 5 to 7 years for a nuclear power plant to come into operation. So let me put it this way that 4 5 years, you will not be having that kind of clarity on the energy security which you are talking about. And there is one more thing which is happening, that hydropower, in Western world at least, because of the drought situation and you know, because of the climate change, you're not able to generate the same kind of output from hydro in Western world. I have not looked at India's number, whether it is true for India also or not.
Yeah, one very interesting chart, since you mentioned medical tourism, I'm seeing in your presentation is it almost doubles from 2023 to 2029, more than doubles, I think, in terms of size of business. So that sort of puts the entire focus on the hospital sector uh, to really get that growth from not just domestic but global participation in terms of people coming here and getting the cost advantage.
Yeah, actually, but most of these companies, you can already see a massive private equity participation over there. That most of these large companies are having a very, very significant interest from private equity. I'm talking about India is so cheap on medical side. Actually, you can and Canada. I'm giving you an example of Canada. It's not. I'm showing it in a bad light, but the medical system has completely collapsed over here. Where if you need a rheumatologist, appointment, it is 6 months or 1 year away. You know, so that is the problem. Which
Yeah.
in US actually, if you do not have a, if you get, people go to Mexico actually to get their appointments done and then come back to Canada. So what you're finding is India, the medical is so cheap, okay, and so readily available that India will be attracting medical tourism, which already is happening from Middle East to India, will happen from other parts of nearby countries where India will become a major destination. What you needed was airports and roads. You have already have very good doctors. And now you can see the number of airports which you've created in small places where you can have directly have international flights and people can come and go to those medical centers, which are obviously now in a much better quality than what it was 10 years back. So you will have a massive amount of foreign exchange earnings coming to India. How much is this? So there is an ecosystem which is getting developed. More and more people will get jobs. It's just that, people say, I cannot see it. I cannot see it. If you could have seen it, then it would have been completely discounted in the market. You have to visualize that this thing can happen.
So now that you've set clarity in terms of what segments one needs to be in for the people here in terms of investors, and this is, like I said right at the beginning, the most common question: should I invest now? When I say, okay, market's bullish, all this is happening, you have liquidity coming in, and so on. And people's question too: should you just invest now? What would you suggest as the right approach for people to really take?
So if I'll tell you from my experience, and I'm not a registered financial advisor. First, let me put it very clearly over here. Till now, if if you've made a good amount of money, let's say in single different stocks and all, and you're finding it very uncomfortable over here, then better to give your attention to the fund managers. Give to the mutual funds. Okay. If you want to take it out from there, you are very becoming uneasy over there. You are having no control over the valuations have run up. I've made good amount of money, which most of the people in retail investors have made. Zerodha has a chart on that thing. Okay. So give it to the fund managers. Give your attention to the fund managers, because in this kind of environment, they will be very prudent with your money. Secondly, if I have to invest in India today, I'm telling everybody, have a 18 to 24 months STP and go for a flexi cap fund. Don't go for a small, mid cap, or a sectoral fund. At this point of time, give money to the fund manager. Let him decide what part of the market he likes and let him take the call on that. I've already created a basket of portfolio, funds. I started put it on NRIs in January based on my thinking process. Ki this will happen in India, and I put that basket. So yesterday, advisor coach, which had created that basket for us, wrote an independent article on that subject, how that basket has done. So you can actually invest through that basket also to particular fund managers which are in same alignment of the views which I am having. because I picked up the same fund managers. I want this fund managers who was having this particular percentage as a part of his portfolio. And obviously, over the last 6 months, those funds have really outperformed. So this is my thinking process. Having said that thing, I would keenly wait for the budget, because this is where, Rohit, I have a little bit difference of opinion from you. I think the governments and regulators matter more than what they ever mattered in the history.
No, I in fact, to a lot of degree, have come to that learning over time because, whenever I used to have this, when I was writing the economic winter report through the 2010s, at the end of it, I realized that the reason, the one of the components of what changes how the contractized cycle, late stages, winter and spring seasons turn out, has completely to do with government policy. It is like what they do at that point of time determines whether you got an extreme contraction or a recovery or a bailout or a what is what. And therefore a lot of the predictions that this has to end only this way because it happened so in the past go for a toss, where people completely overlook the role of government. So I am completely in line on that, but only thing is maybe I'm not able to judge what path they are going to be taking, and that's where probably we can end up differing.
Yeah.
And the budget, yes, in a few days. Yeah.
Yeah, that's it. Rohit, I think from the government point of view, for them, they want job creation. They're very, very clear about it. And they don't like speculation.
Yeah.
They are also clear on, our regulators are very clear on the speculation part. And my government is very clear, for the last 2 years I'm trying, I'm not able to get job creation done. Although in bits and pieces it is happening, but it is not showing up in the numbers as of now. Without job creation, okay, you absolutely have no future as an economy. Okay, you will not become a global powerhouse, which you keep on talking about. So for me, if the focus is only on these two things, then you have a very clear path in front of you.
Perfect, Ritesh. This has been a very interesting, conversation around various lines, and I'm sure people have questions. The only thing I'll highlight that Ritesh's strength, like he's mentioned, is essentially in picking where he should invest, sectors, macro, and he actually looks at individual funds like how a fund of funds would be managed, which is how his advice over NRI then is also done. So anyone who's asking questions, do avoid stock specific questions because that is not what he does and that's not the forte. So try to keep it on the subject line that we've maintained through this. Based on the requests, I will enable you to speak, share your thoughts and ask your questions out here to the panel. So just give me a moment to start doing
Yeah.
that. Yeah, Bhavesh, I've added you as a speaker. You can speak. Bhavesh. Okay, Scorpion King.
Yeah, what kind of bubble we are talking about? What exactly is going to happen? You're predicting.
Every bubble goes for a parabolic rise. The parabolic rise always happen in the last few months of the market. Till that point of time, it is not a parabolic rise. I think Rohit has written a very good long short report recently, 2 days back, on which he's having some numbers. Now, I am not going to be talking about numbers, but that gives you a fairly good idea about what a bubble can look like.
Yes, so Scorpion King, essentially what we are saying is that we are in that phase, and in fact, sometimes it's said that a lot of money gets made riding these bubbles, but you have to know that if it gets out of hand, then at the end it also falls on your face. We are not there yet, and which is what we are trying to navigate. What Ritesh tried to explain earlier is that if we do manage to get a good consolidation over the next 15 to 18 months, it would actually set us up for a much bigger exponential curve for India, and that is his best possible case in terms of outcome.
Are you talking about just the share market or the crypto market too?
No, we're only talking of the stock market with a specific focus on India.
Okay.
Yeah. Udit. Udit Sangwan.
Yeah. Hi, Ritesh. Hi, Rohit. I think you have shared a valuable insight. I just want to know about the what you feel about the logistic as a sector, because what I feel personally in India is that we talk lot much about infrastructure, but we never talk much about the logistic as a sector, like because it's contribute around 14% in the GDP, but still it's a uh, it's a segment we don't talk much about. I am a founder in a logistic company, and most of the time, what I feel from the VC perspective is that it's a very low margin business. Scale is very difficult in that. So I just want to know your perspective as a whole on this sector.
Rohit, I will not be able to answer this question because I have not done, as I've told you, I have not done work outside of three,
Yeah,
four sectors. My understanding is limited.
yeah, I completely get that. So, Udit, that's not like Ritesh said, not his focus area to give you the perspective of the angle you want. In from a stock market angle, you can see there are very few stocks that have actually done very, very well. And there's no doubt that if a economy expands, that segment also does well, but it's also very price competitive. So that's about, I think, all that we can really say. Shivam Arora.
Hi Rohit sir, hi Ritesh sir. सर मैं ये जानना चाह रहा था आपका ना मैंने 4-5 दिन पहले भी एक यूट्यूब सेशन सुना था एंड वो काफी बेनिफिशियल था नॉलेज के हिसाब से सर मैं ये जानना चाहता हूँ जैसे आपने बताया कि न्यूक्लियर सेक्टर एनर्जी सेक्टर या पावर सेक्टर सर हमको क्या किस तरीके से इन्वेस्ट करना चाहिए स्टॉक स्पेसिफिक या किस तरीके से इन सेक्टर्स में
स्टॉक का तो मैं आपको नहीं बता सकता हूँ। मैं आपको ये बता सकता हूँ कि न्यूक्लियर ऐसा भी नहीं है कि न्यूक्लियर पावर प्लांट आप खरीदो और उस पे यू कैन मेक बिग मनी, बट
जी
द एंटायर इकोसिस्टम ऑफ व्हाट गोज इनटू मेकिंग अ न्यूक्लियर पावर प्लांट इज दिस वैल्यू चेन इज दैट विल डू वेरी वेल। यू नो, जो चीजें लगती हैं एक न्यूक्लियर पावर प्लांट बनाने में, वो सब चीजों में इज वेयर द फोकस शुड बी इन माय व्यू।
और सर आपने जैसे बताया कि मोदी गवर्नमेंट ने भी पहले ब्यूरोक्रेट्स को सुना अभी मतलब जैसे थर्ड टर्म है उतना अच्छा मेजोरिटी नहीं आया सारे स्टेट्स में फ्रीबीज बांटने का कोशिश चल रहा है तो अभी ये गवर्नमेंट सर वाकई में मैक्रोज में फोकस करेगी कि लॉन्ग टर्म इंडिया को लेके जाना है या कि नहीं सरकार बचानी भी है और अगली बार आना भी है इस चक्कर में फ्रीबीज के पीछे ही चले जाएं सर।
दो आंसर दूंगा इसके मैं। आपका आर्गुमेंट बिल्कुल
जी
सही है, बट मैंने एक चार्ट ये भी डाला था। G7 कंट्रीज, बड़ी कंट्रीज में इंडिया इज द ओनली कंट्री जहां पर एक प्राइम मिनिस्टर तीसरी बार आ रहा है, लोग दूसरी बार भी नहीं आ रहे हैं। ओके, सो मैं छोटा सा एग्जांपल आपको देता हूँ। इन्वेस्टर्स क्या देखता है, एक एग्जांपल है, जब ऋषि सुनाक वाज प्राइम मिनिस्टर ऑफ यूके, उन्होंने बोला नॉर्थ सी में ड्रिलिंग करते हैं ऑयल के लिए, एंड ही वांटेड टू डू द राइट थिंग फॉर हिज कंट्री। क्या ड्रिल करते हैं ऑयल, हम लोग क्यों इंपोर्ट करते हैं, हमारे पास ड्रिलिंग करते थे। Now, the new prime minister has come and he says, stop all the drilling permits. So, क्या हुआ, पॉलिसीज चेंज हो रही हैं हर जगह। लाइक यूएस में भी प्रेसिडेंट बाइडेन वांट्स क्लीन एंड ग्रीन एनर्जी, प्रेसिडेंट ट्रंप वांट्स फॉसिल फ्यूल। हर जगह पॉलिसीज आर चेंजिंग, इंडिया में एटलीस्ट पॉलिसीज चेंज नहीं हो रही है। दैट इज वन थिंग, एंड आई डू अंडरस्टैंड, और मैं मानता हूँ कि हो सकता है कि फ्रीबीज दिया जाए, हो सकता है दिया जाए। तो इसीलिए अगेन कमिंग बैक टू दिस थिंग, आपने अपना आंसर खुद ही दिया है, वेट फॉर द बजट। बजट आपको बता देगा कि क्या हम लोग मैक्रो की तरफ ध्यान दे रहे हैं, क्या देश को बढ़ाने की तरफ ध्यान दे रहे हैं, या फिर वी हैव गॉन बैक टू द सेम ओल्ड वे ऑफ गिविंग सब्सिडीज टू पीपल टू बाय वोट्स। आपको सेम आंसर मिल जाएगा बजट के अंदर ये चीज।
ठीक है सर थैंक यू सो मच सर।
Thank you, Shivam. Binod, if you
थैंक
are
यू रोहित
able
सर।
to speak now, Binod, you can ask your question.
Sure, sure. Yeah, thank you, sir, for the opportunity. Sir, I would like to ask about how NBFC and small bank can play a pivot role here.
मैंने
Sorry,
सोचा
housing
नहीं है
finance,
उसका। मैं
NBFC and housing finance.
हाउसिंग फाइनेंस मैंने ये सोचा नहीं है उसके बारे में। मैं पूरा फाइनेंस सेक्टर इज व्हाट आई हैव नॉट कवर्ड इन द लास्ट 2 years एट ऑल, simply because I have stayed away from anything related to services.
And still,
See, my broad sense, so I'll just give you my broad sense of what has happened is that mostly you have seen a re-rating in private public sector banks, right? That is what has ended up happening. Now, if we think that the Indian economy is going to keep compounding at 7-8%, typically you cannot have banking sector underperform for very long. So basically, this long consolidation in banking and NBFCs, when I look at it on the basis of valuation charts, right? So something that we've introduced on the Strike platform also is historical valuation charts. So very interesting. I did one post last week, just looking at pharma stocks. If you do something similar, even for banking, you'll find that over the last 2 years, private banks, NBFCs, a lot of their valuations have actually cooled off. They've actually come down because earnings have continued to grow, prices in the same range. And so the valuation ranges have shifted to the downside. In fact, in the case of, and this not being a recommendation, you need to do your own check. The large banks like HDFC Bank and Kotak have actually hit -2 standard deviations on the valuation ranges, which is the bottom end of the range on a 10 to 12-year basis. So that is where you are, which means that things can only get better for the segment. They've been through a long pause. And if the interest rate view plays out, because see, these are interest rate sensitive sectors, whether it is banking, auto, real estate, these are your interest rate sensitive sectors. And somewhere at a macro level, we are taking a view that interest rates come down. Then as they do, it actually triggers to some extent demand in these sectors. So that is how I am thinking about it.
Okay, sir. I think makes sense. Yeah.
George?
Yes, thank you. We are discussing making of a bubble, and as you said, all bubbles will burst at one point of time or the other. But if, in our case, if the underlying assets are real, they are not paper assets, then will it be an unmaking of a bubble? Because if Indian stock market has done well, then the companies which are doing well are real companies. So, what will be that unmaking of a bubble for Indian stock market? Thank you.
That's a very good question. I will, Rohit, you want to answer or should I answer on this
Yeah.
thing?
No, please
Okay.
go on. Yeah.
Let me tell you, ultimately, a stock price is a function of EPS into PE, right? That's a very simple way of looking at things. Everybody will know, or all the analysts will know EPS of most of the companies which are in their investment universe, but possibly most of them will not have any view on the PE multiples. When I'm talking about a bubble, yes, EPS can continue to grow and it has to grow, but at some point of time, PE multiples will be unsustainable. It will be unsustainable at some point of time. Okay. And once it becomes unsustainable at given point of time, at that point of time, EPS will continue to grow, but the PE multiples contract. So I am looking at P multiples expanding and P multiples contracting. I'll give you a small example without getting name. One of the best NBFCs in the sector went from 2-time price to book to 8-time price to book over the last 7-8 years. Till 2-3 years back, it had a very good run, very good run. Some of the banks went from 1-time price to book to 4, 5, 6, and we were justifying 6 times price to book. But from that time onwards, for the last 6 years, the prices have not gone anywhere, where the EPS has more than doubled. Did you see an unmaking of a bubble over here? Nothing wrong has happened. It's just that the PE multiples have contracted. For me, making of a bubble means PE multiple expansion, and at some point of time, the PE multiples cannot expand irrespective of rising EPS, and PE multiple starts contracting. And if they contract sharply in a very short period of time, the bubble bursts dramatically. If they do not, contract sharply, but goes for a time correction, it is possible for after the bubble burst means for 10 years or 15 years, the market does not go anywhere. It has happened in US, 15 years, the market did not go anywhere. It has happened at many times in different kind of markets that after so much money was moved into a sector, PE multiples expanded. and something happened where the P multiples money moved out of that thing and moved into another bubble, then the P multiples contracted for 15, 20 years. It depends upon what is our starting point. Japan bubble was the worst bubble in the recent time, where it took 40 years for Nikkei to come back to the same level what it was in 1989.
Yeah, in fact, in Infosys in India, I mean, being is also the tech sector is a good example. In fees, multiples had crossed 200 or how much in Y2K. And to take out the Y2K high, I think they took more than 10 years for the stock price to really come back. In fact, in the case of Wipro, it took more than that, almost 20 years to come back. So that's how long you can take once you've gone extreme on valuation. Okay, Pushkraj.
सर मेटल सेक्टर पर आपका कोई व्यू है? काफी लंबे समय से ये सेक्टर परफॉर्म भी नहीं कर रहा है, पर्टिकुलरली सेल और टाटा स्टील, कोई रिटर्न नहीं मिल रहा है इनमें।
मैं आपको स्टॉक के बारे में नहीं बोलूंगा, मैं आपको स्टॉक के बारे में नहीं बोल सकता, मैंने आपको जैसे भी बोला, सो आई विल कीप द स्टॉक आउट। मैं आपको सेक्टर के बारे में बोल देता हूँ जो मेरी व्यू है। वन बेल्ट वन रोड के आसपास मैसिव डेवलपमेंट हो रही है। 3.6 billion people are seeing increase in per capita GDP from Indonesia to Turkey. Forget the Western world. This is a new area of development. Over the last 2 years, China is going through a time correction. उनका बबल बर्स्ट हुआ है ना हाउसिंग का, वहां पर सबको एक ही चीज आती थी, हाउसिंग में पैसा डालना। तो उनका बबल धीरे धीरे डिफ्लेट हो रहा है। तो जब उनका बबल धीरे धीरे डिफ्लेट हो रहा है, जो सबसे बड़े बायर थे ओके कमोडिटीज के, आपने देखा होगा कमोडिटीज क्रैश नहीं हुई, दे आर गोइंग थ्रू अ पीरियड वेयर यू आर सीइंग अ टाइम करेक्शन। ओके, नाउ वी आर सीइंग अब हम नई चीज देख रहे हैं जहां पर ओबोर के आसपास countries are becoming rich, people want to become rich, new infrastructure is getting developed. Look at Indonesia, Thailand, countries around you, Turkey, massive infrastructure is getting developed. Even India में भी आप देख लो। I believe metals, and then there is one more angle of EV. Adoption होता है नहीं होता मुझे नहीं पता। Then there is the angle of green energy. वो all these things put together tells me, and if US were to go for industrialization, I believe this this sector as a whole has a good runway in ahead of us. कब होगा मैं नहीं बोल सकता, everything goes through time correction. Now Rohit, you can take it from me and you can answer this question.
So we have seen a good 50% retracement in the metal index in 2021-22 from where it has been advancing. The only difference is that the pace of advance that we saw prior to 21 is not being seen anymore, partly because of the high rate environment, the rise in the dollar. We have seen commodity prices come off, consolidate, which is sort of solving our inflation problem for the time being. But eventually we start seeing the commodity cycle kick in again because we are taking a view that the dollar weakens. We can wait and see how that plays out. I've got signals on the weekly or monthly charts that are indicating monthly charts are pending. Weekly is already done. So by the end of this month, we will have a sign whether the monthly charts also confirm in terms of the momentum giving a bearish cross. That sort of setting the stage for a much longer phase. Usually dollar bear markets last for up to 7 years, so it's a long period. But the thing is not to expect a one-way run, and it's slowly advancing. At some point the pace will pick up when things show up in terms of actual demand or actual price increases happening in the underlying. But right now I think nobody wants commodity prices to run away as well. Slow advances are acceptable, runaway advances are not, because that would trigger inflation all over again. But we are in a positive commodity cycle environment since 2020. That much is clear. So it just requires patience. That is how I think about it.
Thank you, sir.
Thank you. Dr. Ashok? Dr. Ashok, you can speak. Okay, I'm not able to hear him. There are 3 requests. Elon Musk X. You have something to ask? Why would somebody choose the name of Elon Musk? Well, Sumit Agarwal. Shriram.
Hi,
Hello.
Ritesh and Rohit. Thanks for the opportunity. Yeah, actually,
Yeah.
since we were discussing about Japan and bubbles, so a couple of weeks back, I was just looking at few data points. The Japan in 1989, had a market cap to GDP at 1.4. And China in 2007 was around 1.7. Today, we are probably more than 1.4. So I'm just, if probably markets are going to go up by another 20-30%, then are we actually looking at a long period of time correction, or, half a decade of lost returns or something of that sort? What are your thoughts on that, actually?
So I'm looking at it in a different way. Either we can have over the next 3-6 months, we go, market cap to GDP expands further, the profits are not able to keep up. Although corporate profit as a percentage of GDP are now at a 14-year high, just for your information. Okay, they are picking up slowly. At some point of time, I believe that over the next 18 to 24 months, we will see a consolidation phase. A consolidation phase in the market does not mean that I'm going more towards time correction rather than a price correction. And in that time correction, you will have, fundamentals which will catch up for for you to justify the current valuation, which will look okay to you, and then you will be riding it for the next 5-6 years. At that point of time, it could be 180% of the GDP, 200% of the GDP. I do not know. US market cap to GDP today is around 180%.
Yeah, true.
So it is possible. In today's time, where are the growth areas? Tell me a growth area outside of US and India. Which country will you invest? Where you think about the macro? Japan is a different animal altogether. Japan is debasing its currency, so value of assets goes up. There are only three countries which are having a bull market as of now, according to few different people I'm talking. I talk to US, India, and Japan. Only three people. US is obviously because of only concentrated tech sector, right? Japan is only because of the currency debasement. India is the only one where you are finding more and more a large part of market participating in this thing. There is no other country in the world.
Yeah,
So Ritesh is actually triggers me to ask one more question, which is that recently, and because I'm looking across the emerging market space, we have seen some tick up starting to happen in places like Brazil, a lot of the Asian markets also, Korea, Taiwan. So do you think something is happening in the EM space, or it's just I don't know, is it just liquidity or just moving with the rest of the markets?
Look, the problem is that Brazil was one of my favorites because of 500 basis point of real positive rate. But after President Lula has come, he's changed the completely different policies and he's gone back the socialist way, which markets are reacting. But I strongly believe that there is a massive amount of bull market starting to develop around this Obor Road countries, starting with Indonesia. Indonesia is a great prime example of where the money could be moved. Second, I'm very bullish on Africa. I'm very bullish on GCC countries. Africa, they are throwing their colonial masters out, getting competitive bid inside. Okay, they have the resources, young population, and they are inviting company. They are inviting both US, China, and India, all three of them, to compete over there, create infrastructure for them. So this is Africa for you over the next 8-10 years. Then second, and very interesting thing is happening in GCC countries. Saudi Arabia used to invest its dollar surplus into US treasuries to keep US interest rate low so that US consumer could consume more because it was having US military umbrella. Now, whether it is UAE or whether it is Kuwait or whether it is Bahrain or whether it is Oman or Saudi Arabia, they are no more reinvesting their surpluses into the US economy or in Europe. They are actually reinvesting their surpluses in developing their own economy. In fact, Saudi Arabia will be having a 4 to 5% GDP growth rate. So yes, you are right. As soon as we start seeing more and more of money not moving to US to fund US deficits, and this money finds other places to invest, that is where slowly the bull market will go. Liquidity.
Lovely. Yeah. Let me get on Sumit Agarwal.
यस सर, कैन यू हियर मी?
Yes.
सर मैं एक चीज़ पूछना चाह रहा था, जैसे इंटरेस्ट रेट नीचे जाते हैं तो जनरली मैंने सुना है कि मेटल्स के प्राइसेस ऊपर आते हैं, तो फिर वो मेटल्स के प्राइसेस ऊपर आएंगे तो फिर वो इन्फ्लेशन नहीं पैदा करेंगे, तो वो साइकिल चलता रहेगा।
ओके, बहुत ही इंपॉर्टेंट क्वेश्चन है और बहुत ही अच्छा क्वेश्चन आपने पूछा। अगर मेटल प्राइसेस ऊपर आ रहे हैं, ओके, और अगर हम लोग उसे डॉलर में अगर बाय कर रहे हैं उस मेटल को, तो इन्फ्लेशन आ जाएगी। इंडिया का हमेशा का प्रॉब्लम था ना, ऑयल जब ऊपर जाता था और हम लोग डॉलर में खरीदते थे, तो सबसे पहले जाकर जब भी ऑयल ऊपर जाता था, हमारे रिजर्व बैंक आकर इंटरेस्ट रेट बढ़ा देता था और हमारी जीडीपी ग्रोथ रेट जो होनी चाहिए थी उससे कम होती थी। करेक्ट? अब आप सोचो, चाइना अपना ऑयल जो है रशिया से या उससे ये सऊदी अरेबिया से युआन में ले रहा है, या फिर इंडिया $40 बिलियन या 30-40 बिलियन डॉलर, इंडिया और रशिया ने ऑलरेडी बोल दिया ना $100 बिलियन का ट्रेड होगा दोनों के बीच में, राइट? हम लोग थोड़ी उसे कुछ बेच सकते हैं, हम तो $10 बिलियन भी नहीं बेच पाएंगे, बट $90 बिलियन का हम लोग ऑयल लेंगे। हम लोग ऑयल किस करेंसी में लेंगे? अगर यूएसडी में, समझ लो आप यूएसडी में लेते थे और ऑयल ऊपर होता था, आपकी करेंसी टूट जाती थी। जैसे ही करेंसी टूटेगी इन्फ्लेशन आ जाएगी, जैसे इन्फ्लेशन आएगी इंटरेस्ट रेट ऊपर चले जाएंगे, राइट? ये सिंपल है ना, सिंपल मैक्रो, करेक्ट? अब आप सोचो, ऑयल 90 गया या 100 गया, बट आपने डॉलर में नहीं पे करा, आपने उसे आईएनआर में पे करा। समझो एक 30-40-50% ऑफ योर ऑयल यू पे इन आईएनआर और यू डू पे इन नॉन यूएसडी। आपकी यूएसडी आईएनआर पे और आपकी रिजर्व्स पे कुछ फर्क नहीं पड़ेगा, बट आप ज्यादा रुपया दोगे उसको रशिया को। रशिया के पास ज्यादा रुपया होगा ना, और वो रुपया से वो आपकी चीजें खरीदेगा, करेक्ट? तो जब तक 70 से 90 $100 तक ऑयल है ना, अभी मेरे को कोई चिंता भी नहीं है। जब तक आप जैसे ही बाईपास कर जाते हो ना यूएसडी में, यू स्टॉप डिपेंडिंग अपॉन यूएस डॉलर और impact of global asset market, global commodities on your GDP growth rate, on your macro. ये बहुत बड़ा गेम चेंज हुआ है। ये 2022 के यूक्रेन रशिया वॉर के बाद का चेंज है इंडिया का मैक्रो का। आप सोचो, आप सऊदी अरेबिया से ऑयल खरीदते हो और आप सऊदी अरेबिया को बोलते हो ये रे रुपया, सिंस तू तो रशिया नहीं है, तू तो हमारे यहाँ इन्वेस्ट कर सकता है, तो सऊदी अरेबिया या यूएई आकर बोलता है यार मेरे को इंडिया में 4-5 लाख करोड़ का प्रोजेक्ट दिखाओ, मुझे 20-50 हजार करोड़ नहीं इन्वेस्ट करना है, मुझे 4-5 लाख करोड़ करना है। और उसे क्यों करना है? यंग पॉपुलेशन है, 12% का नॉमिनल जीडीपी ग्रोथ रेट है, दुनिया में हर जगह पॉपुलेशन ना ओल्ड होती जा रही है। जहाँ ओल्ड होती है पॉपुलेशन, स्टार्टिंग फ्रॉम कैनेडा, अदर पार्ट्स ऑफ द वर्ल्ड, वो लोग क्या करते हैं, या जापान, उनको एसेट्स चाहिए जो कैश फ्लोइंग एसेट हो, जहां पर वो अपनी ओल्ड एज पॉपुलेशन का ध्यान रख पाए, करेक्ट? सो दे आर ऑल गोइंग टू इन्वेस्ट इन कंट्रीज लाइक इंडिया, इन रियल इकोनॉमी, एन्युटी एसेट्स, जो आज सीपीपी कर रहा है। इंडिया और कनाडा के रिलेशनशिप बहुत खराब है, but Canada pension plan still continues to buy Indian assets, Indian road assets for annuity, old age population. So I'm saying you two things. अगर मेरा ऑयल का प्रॉब्लम खत्म हो जाए, जो मैं रुपये में ले पाऊं to some extent, और दूसरा I have create and this money can be utilized, जो वो मेरे से रुपया लें, to invest in our economy. आज से 15 साल पहले शायद एक ही बैंक होता था इंडिया में जिसमें आप आईएनआर अकाउंट खोल सकता था एक फॉरेन कंट्री। आज आरबीआई ने 37 बैंक्स को अलॉट करा है कि तुम अपने आप ऑस्ट्रो अकाउंट खोल लो, यानी कि ये कंट्रीज कैन, बांग्लादेश कैन ओपन एन अकाउंट विद लेट्स से यूको बैंक इन INR. शायद वो दूसरी बात है कि बांग्लादेश हमें कुछ एक्सपोर्ट नहीं करता, बट बांग्लादेश को हम लोग लाइन ऑफ क्रेडिट दे देते हैं, ये रहे तेरे 5,000 करोड़, हमने तेरे को 24,000 करोड़ की लाइन ऑफ क्रेडिट सार्क को दी, ये रहे तेरे 5,000 करोड़. ये 5,000 करोड़ यूको बैंक के पास INR में रखे हैं. बांग्लादेश एनी टाइम इट वांट्स इट कैन यूज दैट 5,000 करोड़ टू बाय इंडियन गुड्स एंड सर्विसेज. आपने दो चीजें कर दी, आपने INR इंटरनेशनलाइज करने की कोशिश करी, और आपने अपने इकोनॉमी में मैन्युफैक्चरिंग या सर्विसेज को बहुत बढ़ावा दे दिया. ये नेसेंट स्टेजेस में है, टाइम लगता है हर एक चीज में. डॉलर सिस्टम वाज अ 70-year-old सिस्टम.
थैंक यू सर. थैंक यू सर.
Rohit, we'll take just one
Krishna
more.
Gopal.
Just one more we'll take.
Yes, one more, sure. Krishna Gopal.
Yeah, yeah. Thank you, Rohit, for considering the request. And I'm really, very interesting discussion going on. So thanks to Ritesh also. Just two, three doubts and questions you can say. So my first thing is that when we talk about, as you said, about bubble and crash, these are the two words which are generally used. So in terms of Indian market, if we see, in fact, the global market also, that every market has been rising except a few markets like China and all. So there has been a bull market for every stock market. Yeah, but India is like a outperformer. So in that sense, uh, what is means we see there will be crash in Indian market, and not it's not a bubble, because bubble maybe, because you are talking ki if there is a bubble, then it can if burst, then it can take longer period, let's say 10 year 20 year to come out of that bubble. And if it is a normal bull case scenario we are going through, in that case maybe some crash will come or correction will happen, and then maybe it may be 1 year or 1.5 year, and again from there we may start our next bull run. So that is one doubt. Second is that in terms of, if we talk about why India has outperformed as compared to other emerging, so the main reason what I could see is that after COVID, that India policy regarding make in India and attracting manufacturing in India. Uh, so a lot of share which came out of China came to India, and that benefited the Indian economy to a larger extent, and the policies of the government like digitization and savings. So that way, that part of China has come to India, and it has really helped India to perform well as the liquidity created through this digitization and more investment into equity market. Because as you can see, if we talk about foreign inflows, it has been very less inflows over a period of last 2 years. That all is more. Uh, so is it going to continue in future, and there will be increase in the income of Indian, means population? Because if we have to perform in going 4 5 years, so there has to be regular income, regular increase in income, because inflation will be there always. So for investing, you have to have a regular saving and income, increase in income. So that will be there going forward. And policy of India which will benefit for another bull run after any correction, or is it a bubble? That is my these are the two doubts.
Rohit, will you answer this question? Because I've already answered this thing once. Maybe you have a different point of
Yeah,
view.
this uh, my thought is, and so while he was speaking, I was actually trying to think about the 1980s, and I was going to bounce it off you. See, the comparison that I make sometimes, although the 80s was probably the first time we had mutual funds in India, the IPO market really expand, And when I actually started watching the market, it went from a few IPOs to a dozen IPOs a week, IPOs every month, every week, every day. And participation, though we don't have any data point. I do remember, early on CMI data even showing that the savings into equities was, hitting much higher double digits, almost maybe 15-20% at some point of time. Correct or wrong, I don't know. But it did feel like that because everybody, at least, I'm in Mumbai in the financial hub, but everyone around me was, sort of interested in and investing in these markets. There were IPO forms on streets, things you will not see today because we've digitized everything. But that's sort of the environment. And then when I think of this post 2020, you've got participation of the public at large, and people feel that okay, this is a bubble because everybody's buying. But this is a structural trend which we've seen, probably several decades ago, which is why you can't relate with it. That when it's not something that just happens once at the end of a 4 or 5 year bull market, but from the beginning, something has changed and it is continuing. Then it's something which is much bigger. So it's not something which just ends in a flash. Tomorrow morning it's over. The only thing is you want it to play out in a balanced manner. I think that is the issue right now. Is not that there's no growth in sectors where the concerns are like defense or railways. I think two sectors that I've found research analysts really raise doubts on. That really gets you, and then that. But I cannot make that the base case for the entire market. So you want that to balance out. You want those things to consolidate. If you had a big rally in PSU stocks, it makes sense that if actually goes through a 2-3 month kind of a consolidation in that sector, whether it will happen with the rest of the market also pulling back, or whether you can get rotation out of some stocks into others is the only thing where which I'll really watch out for. I do think rotation is possible simply because of a very large liquidity flow that is happening so far domestically, but the possibility that it will get global. We've still not seen it in a very big way. I think money is coming into the Indian debt market, but in equities, the FII data numbers have really not changed, which is probably the only thing pending to happen in a really big way. But then if you have that kind of a liquidity change, then can we really get long consolidation phases, or will we just continue to get rotation as we drive higher? That is that is what I think about it. But I don't think it's over. I think it's something that will last for a couple of more years, and every consolidation is a good thing along the way. So yeah, this has been an interesting discussion. I see a couple of more requests. Maybe if I'll take them after a while. But I would want to thank Ritesh. He spent 90 minutes giving his view, explaining his outlook across markets, sectors, currencies, macro, India, where to be in, what he likes best, and I think it's added a lot of value. Thanks, Ritesh, for giving us this time
Thanks, Rohit.
and sharing those valuable insights. So thanks a lot.
Thank you. Thanks. Bye.
Bye. So guys, for those of you who still have some questions, I'll try to answer what I can. But do remember, do go to web.strike.money. Do try that out. A 7-day trial. I also spoke about valuation charts. Those who are looking at long-term investing and looking at this market from the point of view that from a fundamental point of view, you have all the tools, and we're adding a lot more over there where you should be able to actually scan and pick out these stocks. Because in this environment, what you really want to do is not just know, okay, what is overvalued or undervalued. You actually want to know, okay, which are the top 10 stocks within this segment, right? What are the ones which are hitting minus two standard deviations or plus 2 standard deviations? So we need to add a scanner and tools to be able to do that. All of that is in the works. In the meantime, we have most of the market data information specific to stocks, which is already on the Strike platform. So do go and try it out, and I'm sure you'll find it very, very intriguing. In fact, once you get a hang of it, it's actually addictive. But initially, I find some people who wonder what is really there on this platform, because we've kept the menus on the left hand side. You just need to go and click around them, and they'll open up, and you'll actually get a sign of it. Everything is click and touch and go, to make it very very easy, user friendly for everybody. So that's my thing that you should end up really doing. And I'll take the few pending questions over here, which I can answer, and then we should call it a day. So Ashwini.
Yeah, thank you, Rohit sir, for the opportunity. I want to know your views on the sugar sector because it's hardly performed, and considering that the government wants to use ethanol for driving the economy in the sense to use it by the oil companies, and in a way also subsidizes your import cost of oil. What is your views on the sugar ethanol sector, sir?
Yeah. So my approach to commodity related sectors is often based on the underlying commodity price itself. Okay, and in that sense, sugar prices actually went through a long consolidation phase, but have recently broken out, I think, around a month back. So I was covering the sugar sector a lot 2 years ago, and in between we've sort of backed off. But now I'm starting to write about it again, because I think the global sugar cycle seems to be picking up again. Along with the commodities, there was actually a breakout in sugar price, which is usually my starting point for the whole thing. So I do think that long consolidation in sugar stocks is over, and they should actually see a significant pickup from here.
Thank you, sir. And I have one more question to add on, if you permit me.
Yeah.
You said about the dollar peaking out, but would you say that you would find rupee strengthening other currencies like Australian dollar and Singapore dollar and euro? What are your views on that, sir?
Rupee strengthening, meaning I didn't get the
I
question.
mean, you said dollars peaked out. So do you think some other
Yeah.
currency would become more stronger in relative terms that you see in terms of because dollar, if you see,
So which currency will get more stronger when the dollar weakens? That is what you're really asking me.
yes, sir.
Uh, Looks like a very, very tough call, because right now, when I'm looking across currency pairs, they've actually been very, very lethargic. They're moving very, very slowly. So calling a big move has not been easy in terms of at least in the emerging market currencies. So yeah, I'm not particularly sure which one would strengthen more than the other.
Thank you, sir. Thank you for patiently answering. Thank you.
Ajay.
सर नमस्कार।
नमस्कार।
सर मैं ये कह रहा था, जैसे इंडिया में इस टाइम अग्रेसिवली रोटेशनल कैपेक्स हो रहा है सब सेक्टर में, एनर्जी में, स्टील में, सीमेंट में, रेलवे में, डिफेंस में, तो जब ये सेक्टर वाइज रोटेशनल कैपेक्स हो रहा है तो क्या ये बबल बनने देगा जी मार्केट में? इंटरेस्ट रेट कम होंगे तो प्राइवेट सेक्टर भी कैपेक्स करेगा अग्रेसिवली।
तो मेरा ध्यान कुछ ऐसा है कि सेक्टर रोटेशन हम इस बुल मार्केट के शुरुआत से काफी हद तक देख रहे हैं कि जब शुरुआत हुई थी तो मेटल सेक्टर ने बहुत आउट परफॉर्म किया। बाद में हमारे हॉस्पिटैलिटी सेक्टर और ये सब में पिकअप आया जैसे जैसे कोविड खत्म होने लगा। फिर इवेंचुअली पीएसयू स्टॉक्स में कोई मान नहीं रहा था, तब भी मैं बोल रहा था पीएसयू स्टॉक्स चलेंगे, फिर तो काफी चल गए। तो पीएसयू स्टॉक्स चलने लगे तो दूसरे सब सेक्टर काफी हल्के हो गए। ओके, लार्ज कैप ऑटो सेक्टर्स जैसे हैं वो बीच में काफी कंसोलिडेट कर रहे थे, बैंकिंग काफी कंसोलिडेट कर रही थी, नहीं चल रहे थे। तो ये जो सेक्टर रोटेशन जो थीम है, मुझे लग रहा है इसके होते हुए बाजार आगे आगे बढ़ता जाएगा। तो जो ओवर वैल्यूड सेक्टर्स हैं वो कहीं ना कहीं अटकेंगे जरूर, क्योंकि ऐसा तो नहीं हो सकता कि भागते ही जाएंगे एक ही तरफी। और अगर फंडामेंटली लोग बोल रहे हैं, जो कि मैं एनालिस्ट से जिनसे बात कर रहा हूँ, वो अगर बोल रहे हैं कि ये जो सेक्टर्स हैं ग्रोथ तो जरूर होगी, बट इन्होंने इतना ग्रोथ डिस्काउंट कर दिया है कि लेना बिल्कुल समझ में नहीं आ रहा है। तो वो रोटेशन होएगा, कहीं ना कहीं पैसा उसमें से निकल के दूसरे सेक्टर्स में जाएगा, और दूसरे सेक्टर, और ये चीज दिखने लगी है। आप अगर देखोगे पिछले एक महीने का मूवमेंट, तो आप स्ट्रेंथ देख रहे हो नई सेक्टर्स में। आईटी में वापस स्ट्रेंथ आ गया, ओके, एफएमसीजी में वापस आ गया, फार्मा में वापस आ गया। तो ये जो हो रहा है, और रितेश जैन ने भी पहले कई सेक्टर्स बताए जिनमें अगर ध्यान कोई देखेगा तो कई ऐसे सेगमेंट्स हैं, स्टॉक्स हैं जो कि अंडर वैल्यूड है मिड कैप स्मॉल कैप में, जिनमें वैल्यूएशन चेंजेस अब जाके होंगी। तो जो ओवर वैल्यूड है उसमें पैसा हट के अंडर वैल्यूड में जाएगा। अभी यही चीज यूएस में भी हो रही है। लोग परेशान हो चुके हैं कि वो नैस्डैक ही चल रहा है, वो मैग्निफिसेंट 7 और 5 ही चल रहा है। और मैंने पिछले कई दिनों में वीडियोस में भी बताया, लिखा भी है कि आप धीरे धीरे ध्यान दीजिए कि जैसे इंटरेस्ट रेट का दर यूएस में नीचे आने की बात हो रही है, जैसे बॉन्ड यील्ड गिरे। इनफैक्ट पिछले हफ्ते हमने देखा कि बॉन्ड यील्ड के गिरने से यूएस का बैंकिंग सेक्टर, यूएस का रसेल 2000 मतलब स्मॉल कैप सेक्टर, और बहुत सारे दूसरे सेगमेंट्स, ऑयल एंड गैस सेक्टर में ब्रेकआउट आया। तो ये सब सेगमेंट्स चलने लगे हैं, न्यू हाइज बनाने लगे। तो शिफ्ट होता है। ऐसा जरूरी नहीं है कि अगर एक सेगमेंट भारी हो गया है तो वो पूरे बाजार को लेके डूबेगा। ऐसा हो भी चुका है। Y2K हमारे सामने एग्जाम्पल था कि सिर्फ टेक सेक्टर की तेजी थी, पर टेक सेक्टर की तेजी में दूसरे सेक्टर्स में ग्रोथ नहीं थी। अभी जो मामला वो कुछ अलग है। सेक्टर्स बहुत सारे हैं जिनमें ग्रोथ हो रही है, पैसा पूरा एक सेक्टर को चेज कर रहा है। तो इसलिए दूसरे सेक्टर को चुनना जरूरी भी है, और आ, मतलब भी बनता है ये करने का कि आप दूसरे सेक्टर जहां ग्रोथ हो रहा है वहां पे जाएं।
सर 3 सेक्टर जैसे बैंक, फाइनेंस, ऑयल एनर्जी और टेक्नोलॉजी, इनकी सबसे ज्यादा वेटेज है निफ्टी में, और इन तीनों सेक्टरों के अंदर कहीं बबल्स है? लगता है आपको कि इसकी वजह से कोई बबल बन जाएगा और बबल बन के सारा मार्केट को कोई फर्क पड़ेगा?
नहीं, बट बनने सी पैसा कब बनता है? पैसा बनता है बबल बनने में। तो अगर बैंकिंग सेक्टर में बबल बनेगा तब जरूर जाके, तब जाके वो परेशानी आएगी ना। अभी तो बैंकिंग सेक्टर 1.5 साल से चल ही नहीं रहा है, तो बबल तो बना ही नहीं है उसमें।
और सर ऑयल एनर्जी और टेक्नोलॉजी भी अभी अभी चलने शुरू हुए हैं, सारे दोनों तीनों सेक्टर, इनकी भी वेटेज निफ्टी में
बिल्कुल,
बहुत ज्यादा है।
Giving?
यस। तो सी, दिस
Guys,
इज द ब्रॉडनिंग, दिस इज द ब्रॉडनिंग ऑफ द बुल मार्केट, जो कि धीरे धीरे ब्रॉड बेस होता जा रहा है, और पार्टिसिपेशन आप देख रहे हो कि वाइडन होती जा रही है।
सर ब्राजील को देखते हुए हमारे इंडिया में भी हेडरूम बहुत ज्यादा नजर नहीं आ रहा सर?
ब्राजील में क्या हो गया?
पीछे जैसे 2003 के बाद ब्राजील चला था तो कितना चला था, ऐसे इंडिया अब चल रहा है सर।
बिल्कुल सही बात कह रहे हैं।
तो अभी तो बबल्स में बड़ा टाइम है सर, मैं सही हूं सर?
हाँ, है ना। हाँ हाँ, सही है।
थैंक यू वेरी मच सर।
जी, मुकेश यादव।
सर मैं पूछ लेता हूँ पहले। सर तो सर एवरीडे जो है न्यूज़ में आ रहा है कि रुपी रिलेटिव टू डॉलर ऑल टाइम लोज लगा रहा है, और हम क्योंकि रुपी में ही कमा रहे हैं तो उसको बचाने के लिए अब कांस्टेंट, अगर जैसे गवर्नमेंट की जो एक्सपोर्ट पॉलिसीज है उसके हिसाब से आने वाले सालों में क्या ये और नीचे गिरेगा या स्टेबल रहेगा, और अगर नीचे गिरता है तो उसके अगेंस्ट हेज करने के लिए क्या इक्विटीज बेस्ट है या रियल एस्टेट में इन्वेस्ट करना बेस्ट है, कि अपना कम से कम जो हम कमा रहे हैं वो डूबे ना और नीचे।
नहीं नहीं, आप कह रहे हैं किस मामले में डूबेगा? मैं समझा नहीं।
सर मैं कह रहा हूँ जैसे ऑल टाइम लोज लगा रहा है रुपये अगेंस्ट डॉलर, सो रोज के रोज ये न्यूज में मैं देखता हूँ, तो अभी तो उसके लिए कि
नहीं,
अगर
बट नहीं नहीं नहीं, इसकी बात सुनिए। रुपी रुपी जो लो लगा रहा है वो बहुत ही धीमे 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 हो रहा है, तो इट इज हार्डली अ डिप्रिसिएशन। वो 5-10 पैसा थोड़ा नीचे गिरता है, हेडलाइन बन जाती है। 5-10 पैसे का मूवमेंट 1% भी नहीं है।
ओके।
तो एक अलग जमाना था, 1990s का जमाना था, जब रुपी 10 से लेके 20 हो गया था। दैट इज डबलिंग, मतलब रुपी हाफ हो गया ना वैल्यू में, 10 से 20 जब हो गया था डॉलर के सामने।
जी।
आज वो मामला भी नहीं है। जब रघुराम राजन बने थे तब भी हमारा करीब 48 से शुरू हुआ था ट्रेड तभी, और वो 69 तक चला गया था। अब तो ये इसने एक साल निकाल दिया 82 से 83 जाने में। ₹1 हिलने में 1 साल निकाल दिया, तो दिस इज नॉट अ बिग प्रॉब्लम।
तो सर फ्यूचर में भी आप ये देखते हैं कि ज्यादा ऐसी डिवैल्यूएशन होने के चांसेस नहीं है 4-5 इयर्स में भी?
नहीं, अभी अभी तो नहीं लग रहा है, क्योंकि अगर डॉलर व्यू बदल रहा है, जिसके बारे में हमने काफी बात करी, कि अगर डॉलर का ट्रेंड नीचे का बनता है तो मैक्सिमम मुझे नहीं लग रहा है कि 83, 84 के ऊपर जा पाएगा, ऐसा नहीं लग रहा है।
थैंक यू सर।
Hello.
यस,
Hi, sir. Rohit, sir. Good evening.
या गुड इवनिंग, बोलिए।
Okay, sir. I just see the headline, "The Making of a Bubble." But I would like to
जी,
express a concern about the bubble, which are, it's already burst in some of the retail segment. Like, I just want
ओके,
to,
कैन यू जस्ट नेम योरसेल्फ, बिकॉज माय स्क्रीन इज नॉट
yeah,
टेलिंग मी हु इज
my
स्पीकिंग।
name is Chetan.
चेतन, ओके, गो ऑन।
Sir, I just would like, I would like to express my concern about the things which are happening in the traders community, or the small traders.
या,
Now, recently, the SEBI is also commenting, and also I think today I've seen RBI also commenting about diminishing deposit rates, and all the money they're suspecting which is going into mutual funds or trading. And the data what they're showing, the traders are like 90% of them are losing the money. This is rightly said, sir. Actually, the some of the cases what I've seen, the people are losing the money and they're selling the properties which their father or grandfather earned, like in a hard way. I would like to ask you, sir, why such a big institutes like could not able to anticipate these things are going to happen, especially after 2020. And if we think about, like, let's say it's going to be more cumulative, adding in the future in a bigger way. How, sir, this one, what it could happen, or is there any way to come out which some of the people who already lost, everything, the money, property, or even their hard savings, everything?
So it's a very, very tough question, because what you're saying is, why can't a regulator know in advance that people will behave in a particular way?
Yes.
Uh, it's hard to say, because there's no precedent. Uh, what does happen in a bull market is participation goes up. Now, sometimes that participation goes up in different ways. Usually, it's involved in day trading. Some people do margin funding. Margin funding also, people get stuck. But uh, the biggest explosive thing which has happened in this cycle, which probably has not happened before, and not just in India, even in the US, has been the options market. And the options market has been exploited in a very, very big way. And I think, if you ask me now, this is my personal view, okay?
Yeah.
If you ask me, the reason for this is not the existence of an options market. The reason for it is the creation of weekly options markets, and in the US, you also have daily options market, right? Daily settlements are happening. There's one day options, what they call as ODOs. So that's become a very big, intraday options have become a very big market there. But introducing products which were essentially meant for hedging purposes,
Yeah.
or meant for longer term speculation, because in US, the hedge funds and all, they don't do day trading in options. They actually buy 3-year, 4-year options, and they bet on some very big changes that can happen. And here you are promoting weekly options and very short time frame options. So sort of, I think, when you promote something of a small time frame, which is of no interest to the large investor, trader, or institution, then you're actually targeting that instrument to retail. So that by itself is a mistake.
Yes.
In other words, you should have never created weekly options.
Yeah.
Now, in the recent paper or recommendation that they have made to the to SEBI or NSE, is that they have actually not spoken about doing away with weekly options. They are saying, no, increase the contract size, cut down the number of strikes and all that. Those are all, see, if you cut down the number of strikes, it actually makes it difficult for even writers to sell. You'll make the market more illiquid. If you want to make it illiquid, you might as well shut it down. But they are not thinking of shutting it down because it's a revenue source. Now it's become a cat and dog in that sense. But otherwise, if something is wrong, and if you don't want retail investors to be trading in a certain product, why did you create a product for retail investors? Which large institution, which mutual fund will want to trade in weekly options? You tell me that. Answer is nobody.
Yes.
So किसके लिए बनाया आपने? So there is the mistake. The fallacy is right there. It's in front of us, but it is not being addressed anywhere in the world, and that's just what it
Actually,
is.
sir, like it's mainly, even I also started watching the market after 2020. Even many of us are doing the same thing. The concern is, the even I have seen in my native, like it's a village actually. Even the people who are participating in the trading, especially, it's alarming. And my worry is like, okay, if we take in a larger way, and the people are taking the loans from the bank, they're withdrawing the money from their credit card, and like if it is an alarming situation, like sure, it's like worrying factor that many of the things like from the dark side it's going to come out, and it's going to be in a bad way.
Yeah. Yeah, I'm hoping they will address it in some way. There's been a lot of talk. Let's see, the budget is in 2 days. Maybe they will address something in that direction.
Yeah, there should be something. But we are hoping.
Yeah.
Yeah, thank you, sir, thank you very much.
Thank you, Kevin.
Hi Rohit, thanks for organizing this.
Hi.
My
Thank you.
my question I think is about the macro standpoint, right? I think globally the central bankers do not want to admit that we are not done with inflation. We are behind the curve in our monetary policies, which is why I think the animal instincts have got better of the people in terms of fighting inflation in whatever possible case they can, right? And putting coming to risky assets and like crypto for all you know, or equity markets. It's a thing where animal instincts come out when people are feeling the inflation, but the bankers do not want to admit that there is inflation. And plus the fact that there is so much of easy credit available these days to dabble in markets. How badly will this end?
So there's a whole now there's a long thesis that I have on this, and I'll try to spell it out. And it has to do with economic cycles, and then we have to study what happened the last time we were in this stage of the economic cycle, which is in the 1940s to 1960s. Which is that when you're coming out of an economic winter, which is basically a period where excessive debt has been taken on and transferred from the corporate sector to the government. Okay,
Yeah.
so that is the first stage of a credit crisis where corporate debt shifts to the government level. So I've written about this in my long short report also. If you want to, read in detail, it's on Indiacharts.com for everyone who's interested. But to further go into it, what happens is that when you are already transferred that credit to the government, now it's the government's job to unwind that credit. So we have various parts of the world which have excessive debt and credit. Okay. And the way they unwind it is either they can decide to default, which in a study has shown that out of 52 such cases, only one default really happened. Most countries will decide to inflate away their debt. So, inflate away the debt simply means that when you're looking at debt to GDP as a number, mathematically you try to increase the GDP, but GDP increases not only by increasing production, it's nominal GDP, which means it increases also if inflation happens. To some extent, therefore, you say yes to inflation. You don't say no. Although publicly you won't say yes, but your monetary policy is tuned to increasing liquidity. It is easy monetary policy basically that expands credit and to some extent intends to create feasible amount of inflation. So that is where Keynes, his entire theory of monetary theory was created back then, that government should intervene and when there's a growth slowdown, and they should help it to grow, but they should also pull back when growth picks up. So now when you in that context, when you study the 1940s to 60s US post World War, Government steps in, spends a lot of money to create growth. Okay. Every time they do that, there's some degree of inflation. So then they pull back a little bit. You get a minor recession, inflation falls back to zero. And then they start again. And then again it grows to a higher level and a higher level. So what happened, therefore, you got multiple bull markets with short consolidations over a 10, 20-year period. It didn't stop the bull market. You just got halts wherever inflation became high. So you see, inflation is a rate, right? It is not a price. Prices are not going to come down. The rate of inflation comes down. So the rate of inflation comes down if we pull back commodity prices. So now for almost 2 years, commodity prices have been flat. Whether it's oil, it's been in the same range. It's copper, it's been in the same range. So now that you've got commodity prices flat, you'll sort of see the inflation rate come off. Now they'll allow, again, go back to easy monetary policy, try to cut interest rates, try to spend more money, get growth. All that will be done, hoping that you'll not get the same amount of inflation. So the hope is that we'll do it slowly. Let's not go so aggressive. COVID required us to be aggressive. We'll be a little less aggressive this time. But less aggressive also doesn't mean that you'll not get another bout of inflation maybe 3 years or 4 years down the line. So now you have this window, right? You have a window in which markets can do well because of easy liquidity uh, till the inflation animal shows up all over again. And that is the trade for from an investor's perspective. That is the trade because that's when the government will be spending more, rates will be lower, and markets therefore reprice all of that on the way up.
Okay. Thanks for your insights.
Yeah. Thank you. Rohit, go ahead.
Hello.
Yeah.
Sir, what I observed was whenever we hit the RSI of 80 on the monthly charts,
Yeah.
normally we get a sizable correction.
Hmm.
So, this happened in 2021. And
Hmm.
what we can also see is that the FII long positioning is at all-time high. I think, according to the new contract sizes, they have as of today 4 lakh long contracts, and they're
Yeah.
around, I think, 80% long. So do you and the similar thing we observed in 2021, wherein after consolidation during this July, August, September, the market just took off to 18,500, and then we got that fall. So do you feel something of that sort is likely, wherein we get a 10 to 15% type of correction in the next 3 to 6 months
So
on the
I'm
Nifty?
there will be corrections at some point of time. I am just not sure that we are ready for it yet. My personal view is that we can go towards 25,800 before you get the next correction. Now, we discussed earlier when Ritesh was there whether the next correction will be a good. His view was that he would prefer that it ends up being a good, 1 year kind of a consolidation because that would then ease a lot of the valuation pressures, etc. If that doesn't happen and it goes on, then it becomes a bigger bubble. But your question is that currently, given the high RSI reading on some time frames and the positioning of FIs, can we get an immediate sell-off? I somehow don't feel it's always immediate. See, FII data does give us an indication, but finally, you have to get a trend reversal on price. That has not yet happened. Okay, so that has not yet happened. So I'm keeping my odds open for this to continue higher. I've also spoken earlier about the potential for rotation between sectors, keeping this going on for a little longer. And the FII data, when we look at it on the Strike platform, so once again, I'm mentioning Strike, which is also one of the handles here. Web.strike.money is where you should try this out. We've put a dozen sentiment indicators where the participant data has been adjusted for contract size changes because this is not the first time that we've had a contract size change. We've had a change from 75 to 25, then back to 50, then back to 75, and now again to 25. So we've done this a couple of times in history, and all the data has to be adjusted every time we do this. So we have adjusted data, and therefore on an adjusted data basis, the high reading that you're seeing on FIA positioning, it's not an all-time high, but it is the highest since 2017. The last all-time high was 2016, which was just before demonetization. So we've gone to that degree. We have surpassed all the highs of the last 2 years for sure. That much has happened. So it is high. It has room to go a little higher. It will lead to a topping out at some point of time. But let the market signal that, is what I'm saying. This point I would not try to preempt it, because in terms of my wave structure and my Fibonacci targets, I'm still seeing this rally has legs to continue.
Okay. So you feel that max to max we may go to the 21-day exponential moving average and then resume the uptrend.
Correct.
Okay. Yeah. Thank you, sir.
Thank you. Abhay.
Yeah, Rohit sir. Yeah, am I audible?
Yes.
मैंने बड़ा बेसिक क्वेश्चन है एक्चुअली मैंने काफ़ी लेट ये ज्वाइन किया आफ्टर कमिंग फ्रॉम ऑफिस सो आई व्हाट आई फील कि आफ्टर दिस कोविड एंड ऑल इंडिया की जो कॉमन पब्लिक है उनका एक शिफ्ट हुआ है फ्रॉम बैंक एफडीज टू म्यूचुअल फंड एंड शेयर मार्केट एंड नाउ दिस इज़ ग्रोइंग एंड ग्रोइंग एंड ग्रोइंग अभी क्या है अगर बबल होता है मान लीजिए क्रैश होता है एफ तो दूसरे वर्ल्ड के दूसरे मार्केट में चले जाएंगे बट इंडियन पब्लिक है जो ये एक एटीट्यूड जो शिफ्ट हुआ है दे कैन नॉट जस्ट लीव देयर मनी इन द शेयर फ्रॉम द ग्रैब द मनी फ्रॉम द शेयर मार्केट एंड स्टार्ट गोइंग टू एफडी they will keep on maybe rotating or maybe doing something so इंडिया में डू यू थिंक कि बबल आएगा या बबल बस्ट होगा because there is a very big push of the common man into the share market.
Yeah. So for a bursting of a bubble, so there are two things here. The reason we've titled this "Making of a Bubble" is because we think that we are in that process where, if markets keep going up one way, they become a bubble, or you can create an even bigger one if they consolidate, and then there are various economic fundamental triggers for growth. Then you can create an even bigger one. And that is the path on which we should ideally be, because we want to grow, right? So now, when does a bubble pop? A bubble typically pops when there is excess leverage in the system. Okay, so there are two things. Sometimes people say, no, valuations can do it, but valuations sometimes alone don't do it. There's often a combination of excessive value and leverage in the system. We've seen this in various points, whether it's Y2K, excessive leverage somewhere in the system, 2008, excessive leverage somewhere in the system. So where is the excessive leverage this time? See, there is some degree of leverage. We are seeing a lot of trading options and so on. But again, when we compare it to history, when we look at margin books of brokers, and I speak to people in the industry, or people borrowing from banks, none of the numbers are off the charts like what they used to be, at certain points of time. Earlier it used to be brokers used to get caught up with all this margin books and used to be forced to sell, and that used to result in the market falling because they're selling all the way down. Those kind of scenarios have stopped happening after 2010, 11, 12. We've actually seen smaller and smaller corrections in time. To some extent, even SEBI's played a role. They've played a role in terms of putting lots of margins on from various angles on traders. Your ability to use funds which are lying in your account, or to even be able to buy something tomorrow that you think you want to buy today. So they've put so many restrictions to avoid any excess from happening. So this lack of excess is therefore resulting in not getting meaningful corrections along the way. So in short, we are really not getting to the point of too much leverage very easily. If we do, then definitely the cracks would appear and be much more significant. Right now, we do have one part of the story, which is excess valuation. We don't have the other part of the story, which is excessive leverage.
Okay, thank you.
Kevin. Is Kevin able to speak? Okay, DNC.
I think I spoke already. Sorry.
Okay, you already taken your question. Okay, DNC.
Yeah. I just now I spoke to you, sir. Thank you.
Oh, okay. So actually, the funny thing here on Android right now today, when people are speaking, it is not showing me that they are speaking. They look like muted.
Oh.
And so I really don't come to know who's speaking. So anyway, I think I've taken all the requests. I'm not adding any more speakers now because it's already 9 p.m. And so this is a good time for us to call it a day. It's been a 2 hour long session, 1.5 hour. Thanks to Ritesh, who's given great insights. I've tried to answer several of the other questions. And for everyone else, I would request you, one, to try out Strike, web.strike.money, to start out your trial period, enjoy the product. We do webinars every Saturday. I'm doing one tomorrow, so that people can understand the product on different features. We explain them in detail, and there are a lot of recorded videos there for you to really learn from. So that's one thing that you need to get down and do. Even if you're a long-term investor, you'll find a lot of data points, especially the valuation charts or the strike valuation setups, which combine valuations with momentum. Second, I've just written my long short report 2 days ago. So those who are interested in getting a big macro view, do go there and sign up and read it at indiacharts.com. You need to sign up for India Charts Insiders, or simply download the India Charts app and start reading the content that I put out every day, because I do publish notes on what is happening in the market on a daily basis. The long short report essentially is the big picture view, and then I just follow it up with daily updates to stay with that trend. So that's all from me. Thank you everyone for participating. See you all next time. Good night.